All right. We're back. I don't know if you're going to join us over there on the YouTube channel and Facebook or however, I don't know what the heck was going on with live stream or with StreamYard. I will double check on that after the fact. But before we get started, let's go ahead and let me ask you a couple of questions. Hold on just a second, please. Okay. Hey, have you ever felt like your trading results are more like as unpredictable as a coin toss? One week you're soaring high, just going, oh, this is the most fantastic thing in the world. The next week you're basically plummeting to the lows of uncertainty. Did you know that a hit or miss result can drain not only your account, but also what's even worse, it can poison your mindset. And if that sounds familiar, I know it does for me because I've been there and done that. Then let's take a look at our new guy for today. And that is, there we go. And let me introduce you to Hit or Miss Harry. Harry is basically a trader whose ups and downs mirror, the face of the market. But fret not, by the end of today's session, we will basically we will have some actionable insight and strategies to steer, your trading ship through the stormy seas of calmer, more predictable waters. Hey, welcome to Trade Your Way to Freedom. Sorry for the little technical delay this morning. I don't know what was wrong with YardStream, but our StreamYard, I'm going to basically find out after the fact. Anil is still with his family in India. But we're going to be basically taking a look at this issue and how it just challenges traders, is that aspect of inconsistent trading results. If you have been able to join us over if you have been able to join us over there on the YouTube channel or Facebook or any of those, if you just give me a thumbs up, say, hey, I'm over here now. And if not, you can catch the recording afterwards. So let's jump into the story of Super Harry, of Hit and Miss Harry. Hit and Miss Harry, he's a guy who's a super smart, knows a ton about trading, but he has one big goal. He wants to be a top-notch trader, the kind everybody looks up to. Awesome. Thanks, guys. He's the one that somebody who always wants to look up. He's got brains for it. He keeps up with what's happening in the market, figuring out all those complicated trends. Now, with all the knowledge and drive, you'd think Harry would be smashing it, right? Unfortunately, winning big all the time. But unfortunately, that's not Harry's story. Here's the twist. His trading results are all over the place. One week, he's the king, making trades, great trades left and right. And then the next week, he's a completely different person, making choices that don't pan out so well. It's like a trading roller coaster. This inconsistency is huge headache to Harry. It's not just about the money, but it is for Terry. It's totally about the money, and that's why he's not focused on his process. But if you've ever wondered, he starts doubting himself. That's a big issue. He starts doubting himself, and that doubt, it's something a lot of traders feel when they go through the same thing, inconsistent results. It's tough, feeling like you have an edge, but your edge isn't working for you. So let's go ahead and jump in first and take a look at, well, what's driving the market? Then we'll get the solutions a little bit later. Something's got to stick. That's old Harry. His darts are going everywhere. So up first today is basically, is the next catalyst for, what is the next catalyst for NVIDIA? The question I want to have a little bit later today is, is NVIDIA a buy right now? That's questionable. I don't know if it is. If you think it's a buy, just drop a Y or an N down in the chat box to tell me whether you think it's a buy or not a buy. Next, small caps tumble after the economic data that came out yesterday that basically was indicating that the Fed's probably going to delay. And also we had a bump up in the 10-year treasuries. So quite interesting. So what are we looking forward to going forward? So let's take a look at what's happening with the indexes. So on the SPY, really crazy out here a little bit earlier today. Okay, SPY. Okay, this is very interesting in that SPY is actually broken below the 8-day moving average. Now, that doesn't mean we're going into a downtrend. However, take a look right here, guys. That is a intraday lower low. And if we get a close below the 8-day, that could be predictive of a downside move on S&P. What else gives me reason to pause about a possible stronger pullback on the indexes is we had a spinning top last week and a bearish engulfing this week. The TSI, the momentums are starting to roll over. We break through on the RSI, break through that level there at the 70 level, and also get across on the weekly TSI. Look what happened the last time it did it. We got a nice little pullback. That was about a 10% pullback, a correction, not a, nothing to write home about, but certainly would give us an opportunity to get into some good trades going forward. What else are we looking at here? That's the spiders. The Russell, IWM. Okay, Russell was really interesting. Russell basically broke hard below the 8-day moving average. Notice that it also broke the uptrend line. So that's a break of structure. Where are we going to go from here? Now we have a new lower low, at least intraday. So I'm looking for Russell to continue to pull back. Let's see if it stops at the 50. It might. Measure your Fibonacci from this low here up to this high here, and it's going to provide you a target range of about, I'm going to say, let's go here, about 196. And that's where the Russell may bounce from that area. And so, yeah, Jake, I agree on NVDA. And that is, in fact, what may happen. I've got to hurry along here, and we'll be over there in just a second. As you can see, it's a long way away from the 200-day moving average, so it is an uptrend. However, weekly-wise, bearish engulfing. Next up, the NASDAQ, the Qs. What are the Qs? Okay, Qs also broke the uptrend structure. A new lower low. So if it helps next week to pull back up, it's sitting right on the 34-day moving average. If we pull back up on this next rally attempt, will be telling about whether or not we're going to drop and fall further from that. But right now, the weeklies, we had a dark cloud last week. Again, if we break and close below the 8-week moving average next week, expect the momentum to also shift to the downside. RSI has already shifted to the downside. What happened the last time it did that? Well, just grab go from this high up here. We went on about an 11% run. And 11 to 10% is only considered a correction. It's nothing to, like I said, nothing to get, freaky about. So we've broken this structure, but this longer term structure here, uptrend, is still intact. And it would be very healthy for it to actually pull back into that structure. That would give us some really great setups going into next week, hopefully. So that's what's going on with the NASDAQ. So what else is going on here? Let's go ahead and jump over to what is going on here. Well, real quick, before we jump into face-to-face, to show you what's happening, I always like to show that, well, I'm showing this picture of your profit and loss will basically show the ebbs and flow of the market. That's what we did in 2023. As you see, by the end of the year, we were on schedule, ahead of schedule, and beat the 40% I target. One of the things that, I don't know, I'm really thinking in my mind of maybe I want to keep the 40% in place, but I'm wondering is the 40% potentially limiting my upside? And I'm going to be doing some chewing on that this weekend to say, okay, maybe I need to remove that. Yeah, it's a really good thing to know. It's a really admirable, thing to beat the S&P for 12 years in a row with an average return of 37%. But is the 40% a cap on me? And I don't want it to be a cap on our trading. And so, which brings us to here, as you see. We're up a little bit. Basically, we were treading water. The month of March so far, we've been treading water. We were taken into some positions this week. And so that's a great thing. But at the same time, we haven't had a lot of upside opportunities. So let's go ahead and take a look. And now, and I realize if we're over there on the YouTube channel, my lips may be moving, and you're not hearing the voice, or you're hearing the voice, but my lips aren't moving, whatever. Just pretend you're watching an old Kung Fu movie or something like that, okay? And that I'm Bruce Lee. So, let's shift gears really quick. As we talked earlier about hit and miss Harry, his results are inconsistent. And with that, his mindset shifts are crucial to break free from the cycle of inconsistent trading. So as we shift gears to chat about this, I want to cover some aspects of mindset that'll hopefully help going forward, because it's a matter of both. To get out of this inconsistency, it's a matter of both structure and also it's a matter of structure, and it's a matter of mindset. And so, first of all, mindset and emotional resilient point. We have to become resilient. And I've been listening to an audio book by Mark Minervini about the mindset of winning. And if you haven't read that or listened to it, I encourage you to go take a look at that. I'll put a link down in the description to show you how to get it. I am an Amazon affiliate, so it won't cost you any more, but I'd really appreciate you use my link. But he talks about this aspect of resilience, and resilience is what basically keeps us going to be successful, and eventually, and it keeps us from giving up. So one of the things we need to do is we need to understand the ups and downs that happen in the market. Trading is like a roller coaster. There are highs, there are low. And when you get that, you won't, feel, and if you understand that, you won't feel as bummed out, when things don't go your way. One of the things that Mark suggests is whenever anything goes against you or goes the wrong way, rather than getting all pissed off, but getting all frustrated, angry, frustrated and hurt, ask yourself, what can I learn from that? Because every experience in the market is a learning experience. And then the other thing, he said, to reinforce your wins. Reinforce your wins by doing what? Celebrating them. And so elevate your emotions to celebrations on your wins. Don't emote. on your, your losses or when you make a mistake, but by asking the question, what can I learn from that? What do I need? How can I get better? And rather than, oh, it's my fault, I'm such a dumbass and all that kind of stuff. No, stay away from that. So learn from every trade. As we said, that's number 2. Knowing your feelings. I know my buddy Mike Lamott talks about talk to your feelings. And I'm not sure exactly how to do that, but he says he talks to his emotions. So be in tune with what sets off your emotions. Know what your triggers are when you're trading. Finally, keeping your cool. Find ways to chill. Maybe it's going for a walk. Maybe it's not turning on your computer until the last hour of the day. Think about that. That's 6+ hours of non-frustration and also non-emotions that could trigger some impulsive trading. Number 5 is set smart goals. Have clear goals that can actually be reached. I encourage you not to necessarily set a goal about I want to make X amount of money. A much better goal is I want to master my system, and here's the steps I'm going to take to master. I have a goal to do 5 simulated trades this week to learn what my trading setups look like and really get that ingrained. That's where you make just some really great progress. And then recognize, Mark Douglas talks about this a lot, dealing with uncertainty. Recognize that the market is going to do what the market's going to do. We control 2 things. We control where we exit or enter. We control where we exit. We should also always look at entering a position knowing exactly where we're going to exit. One of the things that I always find interesting when people just, kind of throw it up against the wall to see if it sticks on a particular trade, they go, well, I don't care if it loses money because I'm in it for the long term. I'm in the long haul. It's a long-term trade, and I don't get that. I don't understand. Why should I take a ride of a negative 25 or more % to the downside just to find out if I'm right? To me, that's foolish, losing money that doesn't have to be lost. And I think it sets up some really poor habits, because if you take the trade and the high probability of the trade is it's going to lose money immediately, then aren't you learning to be a loser? And that's not what we want to be. So with that, I hope that helps. I know it helped me just getting it off my chest. Okay. So as we said, okay, so let's see here. Where are we? Oh, that's him. That's our old buddy. Hit and miss here. He's still tossing his darts at what's going on. Let's jump over here really quick and take a look at some potential stock trades for going in this week. And so poor hit and miss Gary. He's basically suffering the death of 1,000 cuts or something like that. And Garrett, which of your positions hit this week? Basically about 3 or 4 of them hit. I know we got into Gush, we got into LRN, and I think I filled on a total of 5 positions so far for this week. And let's see. So let's take a look at. As you can see, I am rushing really quick to get ourselves done. So the first stock I want to take a look at is to answer the question, is MVDA a buy? Some can say yes, some can say no. Jake was absolutely correct when he identified that this is a absolutely phenomenal, really good looking flag. Okay. Now, there's good sides and there's bad sides, not bad sides, but good about this flag and not so good about this flag. One of the good things is the flag. We're bouncing off the 8-day moving average. One could take a trade right there, right now, with a stop just immediately below the low of today. That's one way to do this. However, what I'm looking at on NVDA also is, see that big black red candle right there? Hope you can see that as red. You should be able to see that. That is a huge bearish engulfing pattern that turned the daily and moving out and correction daily momentum indicators to the downside. So that is still in effect. So that is a reversal signal saying, hey, start getting out of town. So if I were in NVDA, and especially if I had ridden it up, like the 270% it went up into 2023 and the 78% it's gone up this year, it may be a great idea to start pulling off a little bit of the profits. Now, you don't have to, that's one of the things that you can learn. You don't have to have an all or nothing perspective, but pay yourself a little bit. Because what is paying yourself a little bit, taking some profits off the table do for you? It helps you get the mindset of a winner. And we have to teach ourselves how to win in the market. So that's what I've got going on with. So it's a toss-up, Jake. I mean, you could take it here. My upside on it, if I took a trade right where it's at right now, one of my upside targets would be just back at the previous high, which would be about 7%. So not bad for a couple of days' work. Next one is another real powerhouse, which not doing quite as well as, and that's Now. And this is ServiceNow. This is really looking awesome. 5 weeks ago, we had a bearish engulfing pattern, which corresponded here. And we're getting this jackhammer effect on the moving averages. And it is finally breaking and closing below the 50 on higher volume. So this may be a nice little rounding attempt to fall back down. To where? Probably back it down just to the uptrend line. So keep your eye on that. So that may, in several weeks, give us an opportunity, probably about, I'm going to say about the 700 to 720 area to jump on a trade. So that's Now. Marathon. Okay, this is looking really sweet on Marathon. I have the TSI on the daily chart starting to work back up. What do we have currently shaping up here? We have a bullish engulfing on this really nice pullback down into the Fibonacci's. It's out of sync though with the weekly momentum. The weekly momentum is still showing, hey, I still want to be falling. So I really like more. I think this may be a head fake, but we'll have to see. We'll have to wait a couple of days and see if it's a head fake. Because it's at a level of past support, you see there, but is it going to really roll back up? Look for a move back up into the 8 to 20 or 8 and 50-day moving average. If it rolls over, then watch for it to get back down about the $15 level. And that's where I would just be ready to jump all over it. One of the other trades we need to be looking at is if the NASDAQ does continue to fall, watch SQQQ. SQQQ on a drop back into the 8-day moving average, which would be about $11 or so. And I would put an alert about that area and watch it for it could, because it could break out from there. Note that, this goes up when the NASDAQ goes down. If the NASDAQ continues to confirm to the downside, this could bounce up. Don't be fooled by this, how shallow this look. This move from here on the path, the last time it did is actually 42%. So from the low of the Keltner to the high of the Keltner over time is a heck of a move. And so don't be fooled thinking, oh, it's not worth it, especially if you're looking on the weekly chart. How are we doing? Okay, we're doing pretty good. A couple others. Okay, I'm saving Tesla for last in case you were wondering. Okay, Amazon. Amazon's looking pretty interesting. It is just starting to drive sideways. I would say Amazon was a buy towards the bottom of the Keltner channel here on the daily chart. Note though that the momentum on the weekly is rolling over, and but how far is it going to go? I like it maybe down at 172-ish. Amazon is one of the top, one of the better Magnificent Seven stocks that I would be interested in investing in longer term. The other one, GOOG. Wow, darn. There we go. Let's try that one more time. Okay, Google has basically broken back above the 50-day moving average. However, it is going back up into this uptrend line. Will this action be to kiss the trend goodbye and fall further? We'll see. We'll have to wait. Right now, it's looking like it could be a bounce to the upside, but we'll see what happens. This does constitute if it does break down from here, that is a lower high also. Next up, and last but not least, Tesla. And they laughed at me when I said Tesla may be going to 152 or 120 down here. One of the things that I'm looking at on Tesla that makes it very interesting, excuse me, is we have broken out the bottom of the channel. Now the bottom, and I'll show you one thing on Tesla. If you think that, this 101, 102 is a long way away. One of the ways you can use these channels is to basically just take the width of the channel, which is that wide, and then from the breakout, activate this. I'm going to show you this just once. We broke out right there. Oftentimes the next move, it's not going to move there all in one fell swoop, but that gives us a downside projection of about $85, which is kind of in between the 65 here. So that if this channel fulfills to the downside, that gives the target on Tesla. And so, and Jared, Apple is not on the list for today. And I would normally do that if I would normally take a look if we had the additional time, but with the problem with StreamYard, I'll have to bypass. Apple's also not one of the strong. Not one of the strong Magnificent Sevens. It's gonna should be gotten off the list. So if you're like here, you probably found yourself staring at your portfolio, wondering if it's the right time to sell a stock. That's one of the things that we always. And so a part of the deal, maybe you're holding on to winners, hoping for even bigger gains. Or clinging to a loser praying for a turnaround. I think we've all been there. It's a scenario where many traders face. They basically, but what have I told you? There is a way and method, to the madness of when do you trade or when do you sell out of a stock? First of all, one, you have to accept that it's always a compromise when you sell. So there will be mistakes that you will make. And so, let's be real. Have you ever made a trading decision you wish you could have taken back? I know I have, many, hundreds. It's natural, but the key is to cut your losses as quickly as possible. At the same time, though, learn to protect your profits. Learn to protect your profits. Like if you're up 100%, how much of those profits are you willing to give back? Know what that number is before you're in the trade. Number two is if you don't sell too early, you'll wind up selling too late. I think one of the biggest advices that I've seen is to sell on strength. If you, and Bill O'Neill actually talked about it. He says apply the rule where you take off some profits for sure at 20 to 25%, because the majority of stocks will run up 20 to 25% and then slow down or stall out or just linger. And when that happens, that's dead money. Now, of course, there are some that are like NVIDIA. And that's why you don't sell everything, that you want to be able to catch that to the upside. So it's not, it's not just about following the rules blindly. It's about understanding what the market trends are. 3, plan your exits before you enter, and that's self-explanatory. That should be part of your planning process. Guard your gains. Again, if your stock is up 15%, do you want to give back all that 15%? If the price action reverses, it's crucial to find that balance between greed and fear, and journal about it. Write it down. And here's the one I really like: is don't marry your stocks, just date them. I heard this the other day. It was basically, marry your system, but only date your stock. And that's a really great strategy and a great sentiment to remember. It's okay to take some profits and walk away, especially when the signs suggest it's time. Is it time to take your profits on NVDA? Number 6, learn to ditch your losers first. That makes a lot of sense. And then watch the charts when selling. A lot of times they say, be aware of the fundamentals and the charts when you're buying, but use the charts for your only selling triggers. Lastly, the most important sell rule is to buy at the right time. I agree with that wholeheartedly. I know that that even Jesse Livermore basically said, never buy a downtrending stock. And that's one of the things that I wonder, because, the question, Tesla, Kathy Woods just invested a whole bunch in Tesla. Now, yeah, it's approaching a support area, but she's buying a falling stock. Does that make sense? Is that a wise deal? Time will tell, and we don't know exactly where she's going to be taking her profits. So, anyway, let's see here. So, a lot of times, especially when you're first getting started, you wind up, how many times have you bought at a peak? And at every swing high, there's a whole bunch of traders that are sitting there going, oh, I wish I would have not done this. And they're also doing the prayer: if the price action will only get back to where I bought it, I will exit, or even close to where I bought it. So anyway, by integrating all these strategies into your trading routine, you'll be better equipped to handle the inherent unpredictability of the market. Remember, consistency in trading isn't about never making a mistake. It's about learning, adapting, and making informed decisions that align with your goals, risk tolerance, and turn those hit or miss outcomes into a pattern that of steady progress. And that's what happened to Hit or Miss Harry. He is now a happy guy. Simplicity is the key to brilliance in trading. So, hey, if you want to unlock the secrets to winning the winning autopilot trading system, you'll find them in Trade Your Way to Freedom. Retire sooner with more money and less fear. I'll put a link down in the description. The great news is the audio book is finally back from the editors and will be up on the website next week. And there'll be a link in case you want to get the audio version. I will put that down in the description. Yeah, the audio, I'm happy about that. Hey, if you found today's insights valuable, consider exploring further by checking out Market Tech Talks for more solid trading tips and the Ancient Trader and Ancient Trader Wisdom. So thanks for joining us today. Let us help you on your journey. I'm really, pleased that you join us. Anil, Godspeed coming back home. So stay focused, trade smart, and here's to your trading success. Aloha. God bless everybody. And I'll see some of you in about 5 minutes. Aloha.